Good evening, ladies and gentlemen. Welcome back to Walk the Block. We are navigating digital finance all together. We're very excited to be talking with you guys here on a particularly interesting Monday. Yes, it's no surprise that gold did hit $5,600 over the weekend, or rather on Friday, and then had a rather aggressive correction. And then Bitcoin, same time, also had an aggressive correction. So the question is, if gold was going up, then it dumped, why was Bitcoin chopping sideways and then dumped instead of going up as well? Well, we'll be discussing all that and more. And including that more, which, by the way, Mr. Scrubhead, good to see you, sir. He says, I've been looking forward to the stream all weekend, hoping y'all would share your thoughts about the Clarity Act. Yes, we do have some updates on the Clarity Act. The Clarity Act is still not really going up for the mark and vote in the Senate committee, but there actually was another bill in the Agricultural Committee, the Digital Market Structure Act, that got passed through there, and I believe is on its way to the president's desk as we speak. But outside of that, good to have all you guys here with us tonight, including Mr. Moonpill Rational Optics saying, what's up, gentlemen? Good to see you, sir. Folks, I'm your host for this evening, Zenith, and I'm joined by my excellent co-host, Mr. Tracker. How you doing, buddy?
Doing good as always, man. Just trying to recover from the whiplash over the weekend. More shenanigans in the markets. We're going to have to go through and try to digest this for everybody. Yeah, a lot of mixed signals right now going on. So we have to unwind all this first. So looking forward to getting into it because it definitely it's a frustrating weekend for a lot of people who had been still holding. For those people who had already taken profits looking to enter in, it's a good opportunity for you. But let's go through it. Let's dive into this, man. Let's get into this because there's a lot of stuff to unwind. And this is also is this the 50th? Stays the 50th show here finally,
baby. Episode 50. There we go.
We're not going anywhere. We're not going anywhere, That's guys. True. This market could go down a lot more. We're still gonna be sitting here, still kind of plugging away. So don't worry about that.
Yeah, I want to say, what is it? There's like a stat that's like 95% of podcasts don't ever make it past episode 5. Approximately 90 don't make it past their first few episodes. Often referred to as the pod fading.
Oh, that's cool, man. So it's kind of like restaurants.
Yeah, pretty much. Yeah, only 10%.
Yeah, something like 90% of all restaurants.
Yeah, 20 episode milestone is. Yeah, dude, restaurant business is tough.
There's no way in hell I'd ever
open a
restaurant. There's no way.
I mean, dude, unless it's one of the more tempting offers.
If it's a family-owned, man, listen, I'm very familiar with the restaurant industry. I'm very familiar with culinary arts. Trust me. I understand how the whole business works, and like 90% of them don't make it past first year. Your margins are so tight, so small. It is excruciatingly difficult. Like everything stacked against you. You gotta crush it on every aspect, and you need some luck to go along with it. But yeah, no, what we're doing here, this is nothing compared to running a restaurant. This is nothing.
Minimal startup cost. We paid for StreamYard and some other tools, and then after that, just got a camera and hopped on the mic.
Hey man, kudos to those that run restaurants, because trust me, I know what it's like. It's brutal. It's brutal. I've seen every aspect. I've seen it from the 4 or 5 star aspects all the way down to the little mom and pop on the corner, man. Trust me.
Yeah, rough stuff. Rough stuff indeed. Alrighty, we'll tell you what. I got a quick one that I want to hit real quick before we get into it. It's not much, but it's an important, and some folks might argue it's a bit of a staple of our show, which is the old Federal Reserve had a meeting on Wednesday of last week, and Jerome got up there and decided no change. No changes. We're keeping the rates at 3.5%. And as it stands right now, the poly market odds are set at 90%, no change in March as well. The reason for that being, well, we had some good inflation numbers come in. We also had good GDP numbers coming in, and job numbers remain the same. So Jerome kind of shifted his tune a little bit. He does largely believe that the dual mandate is back in balance to a degree, which is full employment and stable prices. So as a result, it seems to me that Jerome is very comfortable sitting exactly where he's at until something changes in the economy. So I imagine that's where we're going to be. The big question of the press conference, though, is that people were asking him about the investigation, about his replacement. Is he going to stay on? What's he doing next? And all of the answers to those questions was no comment. I don't talk about that up here. This is not the meeting for that. So you really didn't miss out much if you didn't catch the press conference on this one. But yeah, I would argue that there's almost more focus on Jerome Powell than Jerome Powell's decisions at this point. Any thoughts, sir?
Jerome Powell's gonna basically he's going to quit being the Fed. New guy comes in. I mean, you're gonna take a step down. No, man, you don't take a step down. You
Nope.
let the stage left, and you're gonna get some. You're gonna write a book. Yeah, you're gonna write a book. That's typically the thing, and you're gonna be a public speaker, and you're gonna probably end up working for, God knows which, maybe another agency, or you're gonna go out there and work for another firm. Is what's gonna end up typically happening. You can make really good money being a public speaker once you're at a role like that. You get paid very well to be a public speaker. Yeah, so he's not going to be hard up for options. Let's just leave it at that.
True. Maybe his buddy Gary Gensler will give him a teaching position over at MIT.
Yeah, I mean, I could get something like that. Typically you'll get thrown into like you could be a consultant for the private sector, like I said, with firms. Obviously, be a speaker. You can get thrown into think tanks, things of that nature. You can move into another area of the government, typically, or typically retire. I mean, how old is Jerome Powell? I mean, he's up there.
Yeah,
Gotta,
yeah. I mean, might be time
he's
to
fairly
retire.
old. Yeah, you could just simply retire. But honestly, if you retire, something like that's going to write a book deal. I mean, and probably do some public speaking. That's probably, if I had to take a guess, that's probably what he's going to do.
Yeah, read a book titled "If I Did Collapse the U.S. Dollar."
Well, it's easy to sit back and be a once you have all the pressure's off you, you can tell everybody what you would have done and all these things and what that they should be doing and and all this other stuff. So, yeah, the Fed chairs, they're not going to stick around. He's going to be gone. New guy, he's going to step in. I think the rates are going to cut. I think it's going to surprise people. I think that's setting up for a interesting. The one thing I was curious about is they didn't hint at anything on another rate cut before he leaves, did he? Didn't
Nope,
say anything. Nope. Typical
not at
Jerome
all.
Powell. Nothing. Well, at least did he say anything that spooked the market?
I don't think so because he was speaking on Wednesday, and all the
It's
action
dead.
we had was pretty much on
Friday.
Friday.
Right. So he's probably just riding this out. Could there be one more rate cut under him? Possibly. The new chair comes in what, May? I think May is when the new chair comes in.
May 15th, or that's the end of Jerome Powell's tenure anyways. After that, it's going to go to they're going to have to get confirmed by Congress, which can be an ordeal depending on what's going on and who is proposed. So May 15th is the end of Jerome. At that point, we'll get someone acting in his place. But then after that, we will hopefully see someone actually, put in there officially pretty soon.
Right. So the administration's been very aggressive. We've been all over this one constantly talking about this one, about they're going to get somebody in who wants rate cuts. Everybody wants rate cuts. Well, not gonna say everybody, but people who have a higher mortgage want rate cuts. So Main Street wants rate cuts. The lenders want lower rate cuts. The risk on assets want rate cuts. I mean, there's a lot of reasons why people want rate cuts. So,
yeah.
And the information and the data coming out seems to be pretty good too. So I know we're going to hint on some of that stuff because the data is definitely pumping us saying we could certainly do rate cuts. We're not running too hot, so we definitely could. So I definitely think that's going to transpire here. I'd like to see one more rate cut before he leaves. That would be really nice. Tee it up, and then if we could get a little more aggressive. I mean, between now and end of the year, next year, everybody I think is predicting 2, possibly 3. I could still see a surprise to 4. I mean, I think you could. I think realistically you could. I think they want to get these rates down a lot more, and there's a lot of debt that needs to be restructured.
That's true. We had good inflation numbers in January. If we continue to get good numbers like that, by the way, good is relative here. My year-over-year tracker still has it at 2.7%, but the real inflation that was touted was 1.7. So everyone's like, it's below 2. So am I thrilled about it? No. But if we keep that similar trajectory, I think it would be even more fuel to the fire of that rate cut narrative. So it's possible, but at the same time, I think the timeline's getting a little extended on it at this point, which is theoretically, I don't think Jerome Powell's cutting during the rest of his time there, unless something drastic changes, which at current time of day, I don't really think it is. So probably no cuts through May. And then after that, you got to get somebody else in there. And then after that, you got to get everybody else on board, and you got to get the guy up there to make the decision as well, and then go from there. So we're looking at maybe June. It sounds crazy to say, but I think that's a realistic timeline.
Okay, roger that.
Yeah. Alrighty. Well, there's not a whole lot going on in that one, other than we wish rates were lower because it would match up with some other statistics very nicely, including this one right here. Manufacturing PMI just hit 52.6 or ISM. I believe this is industry supplier. Gosh, what am I missing here? ISM manufacturing PMI. Thank you. ISM is the company. Pretty much we hit 52.6. What does this mean? Well, for the first time in a while, we're actually above 50 and by a good margin. But on top of that, what it means is that this is the first time we've been above this in about 3.5 years. And according to some of the old folks on Twitter, and what we've been talking about here a long time, is that once you can get up above that 55 number, you can see some really good growth in the market. And that's when you have a lot of good crypto seasons, especially altcoin seasons. So got the tweet here from Master Crypto saying, look, 2021, we got above 55, went up. 2017, got above 55, big altcoin season. We're not quite there, but this is the thing that we've been looking for gosh, like 3 years at this point. We've gotten close, we've teased it, but we never really broke through that 50 number, and we've never gotten through that 55 barrier. So look, things are actually looking pretty decent from like the economic standpoint overall. Granted, we are the crypto channel. We would like to see crypto doing well overall, but that's a slightly different story that we're going to get into later. Overall, is this a bit of a surprise for you? I mean, a pleasant one, hopefully, but is it a surprise, do you think?
Oh, I'm a little bit surprised that this one printed so well, since I know we just looked at I think it was the Chicago Mercantile Index. I think that one was showing us that it had already jumped pretty good, the CME number that had printed, and typically the ISM is roughly about a month lagger. So I was a little bit shocked to see it jump that quickly. So I think that caught me by surprise. But I think if the CME is already jumping and printing off good, this might have legs to continue into next month, is what I'm alluding to. So if that's the case, then like I said, we're having all the recipes. Everything's in place. So why no crypto pump? Indicators are there, risk on assets, everything seems to be checked box, but yet we're just getting suppressed. And it's absolutely frustrating.
That is true. So, I mean, speaking of other folks that are also doing well, let's see. S&P 500 also doing pretty well today. Outside of this one weird glitch they got going on with the charts, and they have a massive wick. Don't think that's quite accurate, but S&P 500 right up next to all-time highs. Had an all-time high on Wednesday. And then the small red candle is Jerome Powell talking. The bigger red candle is the day after, and then that right there is Friday. Here's today. So S&P is doing well. The Russell is also looking pretty good as well. Russell. Near all-time highs again as well. Small correction like we saw. Again, the bottom pretty much was yesterday, which, fun fact, is the bottom for another chart we're about to pull up here shortly. But again, S&P 500, manufacturing, Russell 2000, all looking pretty good. Inflation looking pretty good. So, look, these are good things that people have been looking for a hot minute now. Granted, it's not what we've been looking for, but it seems like the overall economy is actually in a pretty decent spot right now.
Right, and then crypto's just not responding. Thus, no one's really paying attention to this stuff for the most part. They're just looking at the sea of red that was coming in on over the weekend, which there's really not a strong indication of the Y factor. Outside of, yes, I get the low liquidity over the weekend. I get some of that stuff, but I'm still not understanding. It's still kind of confusing, and I'm not sure. It's kind of hard. I like to see who the main dumpers were, but it's just, I don't know. It's frustrating to watch because, like I said, we just talked about everything's in place. You shouldn't have had this dump like you did. There's no justification for it. Like you said, I know on the green screen, could have been just a knee-jerk reaction because of the precious metals. I know we're going to talk about that, but it could have just be that. People got spooked because, I mean, well, first of all, let's be clear. We'll talk about the metals shortly, but how's copper doing? What's up with copper?
I would not be. Oop. Yep. Same thing going on with copper as the rest of the metals. Pretty
Okay.
large dump.
All right. So I think you just had a lot of speculation come into the metals. That's probably what's happened. And it's probably, you know, that's probably most of it's speculation. It's crowded trade. People got in there. Things aren't supposed to move that much. Now copper can, but you don't see moves like in silver and gold like you did. Keep it in mind, you haven't seen moves like that in almost 40, 50 years.
That's true. That's very
Put
true.
put
Actually,
that in perspective for everybody, wrap your head around. You haven't seen moves like that in gold or silver in 40 or 50 years. Like what? So
yeah,
yeah, am I shocked that it pulled back? No. I think for the last couple weeks, 2, 3 weeks, we've been saying as these prices have been going out, you should be rotating out of some of these, taking something off as it's been pumping like that. If you're in these, like if you just stayed in the whole time, it just kept holding. I mean, pigs get slaughtered, man. What do you want me to tell you? I mean,
that's
that's
true.
the old saying. I mean, you can't be greedy, man. You see moves like this, they don't ever happen. And I think what did gold's RSI print? I think it hit like a 98 or something. Gold did. I mean,
I
that's
I got
crazy.
it at 90 on here.
No, it hit higher than that. It
I
was
believe it.
higher than that. At the peak. I think it hit higher. Like it was crazy. It was like it was one of the highest levels it had printed in forever, like a half a century. I mean, you got to wrap your head around those years. Things like this don't move.
Yeah,
Yeah, if there wasn't the repo market, the repo market, and you didn't have all this paper trading that goes on, that 100-time leverage, all these positions that are going around here, 100x, all traded upon trades. If you had a normal healthy market, yes, gold would be much higher, silver would be much higher, but these are manipulated and they're suppressed. So it allowed them to see it make this kind of move, shows you how much just violent movement there was on the back end. Now there was a lot of speculation that the BRICS were dumping U.S. Treasuries and rotating them into gold and silver. There was a lot of speculation like that was happening, along with other people that were jumping in and being a crowded trade. I saw one meme that I thought was kind of summed it up. Could you imagine if you had sold all your crypto position, or, after being low, rotated right into the precious metals, and then they just completely tanked on Friday, just in time to rotate back into the crypto after Friday, just to tank over the weekend into crypto. Like that's just brutal. And there was traders that did that they were trying
yeah,
to chase and they're trying to get out. And man,
yeah. There's definitely somebody that happened to. So, R.I.P. homie. I'm sorry, but the big story for gold and silver on this one, is it's the massive up and it's also the massive down. Going back to the chart here, these last 2 days, those green candles, those alone were a 12% gain for what is supposed to be a stable market in precious metals. That is the biggest that we've seen in a long time. And then also to have a correction of pretty much like 12% on gold and about 34% for silver, that is a massive correction. But at the same time, for people that are, looking at the charts and a lot of other stuff, that's a pretty standard move, which is that you have a lot of up, you have a correction. In this case, it's just rare because, I mean, look at this chart. We've been up for so long. We really haven't had much down. The only other time was here back in October when we pretty much went down like 11%. So you could argue it's similar percentages there, but realistically, it's like you were in that overbought area for a good chunk there after being in the overbought area again, and then earlier in the year being in a massively overbought area as well. But each time the pattern continues, which is that sure, there's a massive correction, but guess what? At the end of the day, you're still up massive. So yeah, gold price is still over 4,000, currently sitting at 4,700. I remember when we were back here, we were like, oh my gosh, it broke 4. No. It broke 5,000. In fact, it broke 5,500. It hit 56. So you could argue that people are really just losing faith in the US dollar, and that's why this is going up. But at the same time, this just looks like increased demand, not just from that, but also I would argue that people have been looking for a place to, get some good returns. And they looked at the gold chart, said, it's been doing pretty well. What are the odds it's going to keep doing well? And then it did so good, in fact, that you got a correction. Yeah.
correct. But
True.
still the head scratcher. Why is
It is
crypto
a
tanking? what everything else is telling you. We should get it. We got the gold dump, got silver dump. Okay, cool. Should the rotation into some of the lagging, riskier assets could take it on? That should have happened. You got the PMI printing. You got the red rate come. You got the new Fed coming in. But Clarity Act trying to make room. All I can think of, the biggest thing that I think after everything I've looked at would be the Clarity Act that I don't think a lot of people think it's going to get passed. And that is because for them to get it passed, they have to have 60% or a certain number of votes to avoid the filibustering, right?
Yes, sir.
So when that goes to the Senate, they're going to need some of those Democrats are going to have to flip, and they're going to need all the Republicans to go with it. Do they have the numbers? And I think since it just squeezed through the first round, I think that's what people kind of started speculating. So it could be that. That's the only thing that could find out. Maybe it's losing some confidence that'll actually come to fruition.
Yeah, I mean, this is me putting on the very cynical Politico hat currently, but when we had the Genius Act last summer, it passed, and I want to say there were 19 Democrats that actually signed on to the bill when they really only needed like 7. So we talked about it in the past, which is that if you can get similar numbers, this should be a no-brainer. It's not even on the floor for a Senate vote currently. It's still in committee. The things going on with the Clarity Act are largely arguments over stablecoin yield. And it's something that's being talked about heavily. Like here coming to us from Mr. Crypto Whale, Trump is set to sign a Bitcoin market bill today. But then also we have, where did it go? Here we go. White House calls crypto and banks to the table. White House will meet up with crypto firms and banks at 1 p.m. today to discuss the crypto market structure bill. This one's Clarity Act, by the way. Talks aim to break a deadlock over how stablecoin yields should be treated. Attendees are expected to include Coinbase, Ripple, Circle, Wall Street banking groups such as the ABA. So that's all the major players right there. This stuff's still getting hashed out. So internally, inside of the committee, I think there's still a lot of disagreement. You have obviously the ABA, who we covered last week, saying that they just straight up openly released the playbook to the public and said, no, we don't want stablecoin yields to be a thing because it's going to affect our markets. We think that they're encroaching on what we have a very handy monopoly on. And then Coinbase, Ripple, and Circle, they're not the greatest DeFi guys, but they're at least closer than the freaking banks. So being able to have a competitive currency alternative is very important, especially in today's day and age where we talked about the US dollar losing like 97% of its purchasing power over the course of the Federal Reserve's existence. So like people are trying to make money, everyone included, whether it's the crypto exchanges, the DeFi bros, or the bankers associations. As it stands right now, the bankers associations have really this very nice hedged and walled off position that they've really just held solid for over a century at this point. And now crypto's coming up as the competitor. People would like a stable money supply. I'm not saying a stable coin attached to the US dollar is necessarily stable, but it's at least more stable than the US dollar is, ironically enough. So this is the discussion. That's what's going on. Until this really gets hashed out, I doubt that it's going to be coming back up for the actual markup and vote in the committee. I hope that it's soon. I really do, because like everybody's talked about, we've been waiting on this one for 7 months at this point. If we get any further on, we're going to get towards midterm season. Nothing's going to happen. All that kind of stuff. Again, cynical Politico hat here though. If this does get to a floor vote, there is a non-0% chance that this could be held up as political theater and a political football when the Democratic Party is honestly more concerned about immigration and customs enforcement. In fact, that's the reason that we have the government shutdown going on right now. Granted, the shutdown is not predicted to go pretty much past the end of this week, the last time I checked Polymarket, but at the same time, that is the thing holding up that. So if this gets to the floor, who says this is also not going to be held up by some other priority as well? I know it's cynical, but based on my experience and the track record, I think it shows that that's kind of what happens with this kind of stuff. If it's not the big pressing issue of the day, it might get treated as a negotiating tool, or it might just get ignored completely.
Yeah. What's going on, Dace?
Happening, guys. Sorry to drag in here late. Just finished up a tennis match with some clients for work. Yeah, no, it's been a wild show. I'm sure you guys have had lots to beat up. The Telegram chat has been on fire with just updates after update.
Yes, it has. A lot of good stuff in there lately.
Yeah, it has. They're But what I was going back on the Clarity Act, once they do go up, just for everyone's knowledge. So the Senate consists of 53 Republicans, 47 senators. I'm sorry, Democrats. So and that's how it's all structured. So they would need a vote of 60 to avoid any filibustering or anybody kind of stopping it from going through. So they're going to need those votes, and that's going to be what they're going to need to do. And I think, as you said, all this negotiation on the back end is going to be basically trying to grease the track so that the banks it's going to be a more attractive deal for the banks. And that might be in the form of, I don't know, we'll let you take a percentage of Coinbase. We'll do an IPO for you guys. You guys take this section, or you take a part of this, or there'll be back end deals like that to make sure that they're hedging all their bets. And if they can get those kind of deals ironed out behind closed doors, then that will translate to the numbers, because let's face it, some of the senators absolutely work for the banks, if not a lot of them. But I just call it what it is.
The banking lobby is alive and well. Let me tell you, they have never been better.
I'm looking at you, Elizabeth. I'm looking at you, Elizabeth Warner.
Yeah, no, you nailed it, man. In terms of like the response to Zena's very healthy, very reasonable skepticism regarding this thing getting passed, I think how strong the compromise is around the stablecoin interest yield problem, if they can come up with a fix for that, the strength of that compromise will be whether it gets front burnered or back burnered, I would think.
That's true.
Just let us DeFi guys have our fun. Just leave us alone, and you guys can figure out what you want to do on central exchanges and everything, since that's probably going to be 80-90% of the crypto traders.
That's fair. I know it's a bit of a long shot, but it is still a possibility that maybe this thing gets passed without stablecoin yield. And then people are still interested in the idea of stablecoin yield. And then it puts more people down the path to DeFi. And they're like, oh, I can just go get that yield elsewhere.
See, that I'm a little more, I'm skeptical of, just because, like, honestly, because of World Liberty Finance, right? They've minted a stable coin, like the first movers in all these policies. Stablecoin yield is in their mind. Like, it's not like it's. I would doubt that it's something they're willing to concede on. They might be able to put, if things go bad, they might say, let's pull this out, kick it down the road so that we can something and get a win, maybe, But yeah, we'll see. We'll see, man. It will not be boring to watch.
That's true. I'll tell you this much. I think my stance on the Clarity Act in its current form really has not changed, which is right now there's nothing on tokenization, nothing on stablecoin yield, and nothing really on DeFi security and privacy. As it stands, if it did pass, I think it still would be a boon to the market. I think it would be a good thing. It's not going to be the best thing we can get, but I think it's a good thing because it's putting rules in place on the table that are going to last longer than the current administration. The current administration has an expiration date, whether you like it or not. Sorry, but that's just how the Constitution is set up. You get 2 4-year terms, and that's that. So if you don't get something passed, then it means that you're kind of at the behest of whoever's in charge of the executive agencies. And as we saw under Gary Gensler's leadership, if you have someone who's against crypto, it can become very rocky and very risky very quickly. And that is going to scare people out of the market, and especially outside of the United States market.
Yes.
So if you get the rules on the table, I think that's good. If you can get tokenization, I don't understand why that one got cut out, considering I thought everybody was kind of on board with tokenization at this point. But even without that, it doesn't mean you're never going to get it in the future. It just means not yet. Same with stablecoin yield.
We looked into the tokenization. It was more like situations, like what do you handle, like how do you handle certain situations that was unclear. That's really what it was. They weren't like pushing back on it. It was just, okay, so how do I do this? In TradFi, we do this. How does that translate to tokenization? It was more like that. Like, what's the processes to account for all the deltas, variations? So no, I they absolutely have to get this. I want to see this get passed into law, like you say, because then it's set. Then it's set. It's going to have much more stickiness by far for the long haul. And like you said, because this administration may be replaced with an administration that's very anti-crypto. It's a huge head when we battled that a whole last administration. It was the boogeyman. But I think everything in this administration, including all senators, Congress, everybody seems to be shifting more in love with crypto and understanding it more and more now. And it's definitely got the momentum. So we definitely need to get some actually things pushed across the finish line. If that means the yield does get taken out, then so be it, because that would lead for mass adoption. Because if the regulation's clear, that means the big guys on Wall Street can now trade and not have to worry about any type of being treated. Like you could get this happening. Oh, yeah, you can do that. You can do what you want to do with your clients now, but then since it's not law, fast forward 4 years from now, when the new administration's in place, they can like, hey, you know all that stuff you did back in then? Yeah. We're gonna find you. We're gonna find you all this because that wasn't actually in the law, and we didn't deem it in our eyes. We deemed it not allowable. There's all those kind of shenanigans. If you make it into law, it's hard to go backfill those things. So I think if they can go ahead and get this tied up, it's going to be huge for them, for a much larger adoption for the masses, which is interesting because 2 of the big 3, like we've talked about, have already said they're going to open it up to their clients. They're talking about $21 trillion worth of money they have assets to. Now, I'm not saying all 21 trillion is going to be going to crypto. I mean, you'd be happy if 3% of that got moved into crypto, but that still can move the needle if just 3% of 21 trillion market start getting moved in. So that's the Black Rocks, and then I believe it was Fidelity. Was it Fidelity or Black State Street? Vanguard. Oh, no, it wasn't Vanguard. Vanguard's the one odd man out, it seems like. I think it's State Street and BlackRock. Those are the 2 of the big 3, right? Those 2 of the 3. So they're going to have their clients teed up and everyone's ready to go. So they need to get this out of the way. And I think
they're just not going to get the votes without the stablecoin yield component. That you said it though, man. They need 60 votes. Are they going to get 60 votes on a bill that doesn't include stablecoin yield deal? Like, I don't think so.
I think there's a possibility.
No, yeah, I think they would, because that's the big thing that the banks are held up on. So if you got that, let's just say that was removed completely. Now there's really no negotiation because they've all talked about how they want to move to tokenization. They want all this stuff here. The only other one on the list.
I don't think you get anybody who's bought and paid for by the bank voting on it without the stablecoin yield, as part of the deal. Like, I don't think you get any blue votes unless the stablecoin yield deal, via the banks, gets some buy-in from the lobbied other side. You know what I mean?
Yeah, Dace, I think you have a good point here, which is that the Senate Banking Committee is one of the bigger committees in the Senate. And the Senate obviously has a lot more entrenched power than the House does. So theoretically, if you got what the banks wanted, odds are, in my opinion, that the rest of the party might be more willing to go along with it. If you don't get support of the lobby, I would argue you're going to face a lot stiffer resistance. So
yeah, so I agree with you. Like, it'd be great for the business. It'd be great for crypto to get it through with or without the yield. But I don't know that you get it past the votes without the yield,
Yeah. One of the other reasons that I have for this is that, real quick, to pull this guy up. So Tracer, DeFi Tracer, U.S. Senate will discuss crypto market structure bill tomorrow at 2 p.m. This one is actually the other one. So this is in reference to the Senate Agricultural Committee. They passed a bill called the Digital Commodity Intermediaries Act. Pretty much what it did was it gave the CFTC explicit authority over spot markets for digital commodities, i.e. Bitcoin, Ethereum, all the other ones in that basket. And it starts creating a lot of core rules and structure for people operating inside of the crypto space, whether you're an exchange, a broker, a dealer, all that kind of stuff. And what this one specifically does not do, though, is that this one does not address the split between the SEC and the CFTC. This one is pretty much purely CFTC. The reason being so is that it came from the Agricultural Committee, who has dealt with the CFTC in the past for the agricultural futures markets. So I know it sounds a little odd having a crypto bill coming from the Agricultural Committee, but that's the little in there. And then outside of the SEC and CFTC, no stablecoin yield in this one. And it's not the full Clarity Act, but it does give a good framework to what are digital commodities as defined by this, and what is also hopefully going to be reaffirmed by the Clarity Act. So, like, this one in particular, I say that this is relevant to the discussion about can the Clarity Act pass, because this one got out of committee by a 12-11 vote right along party lines. So if you want to use that as an indicator, that means that these bills are still largely partisan, meaning that it's one party pushing, but the other party pushing against. If that's the case, then we go back to that 53-47 split inside of the Senate that Tracker mentioned previously. So it might not be looking great if this is something as a track record for the other stuff.
said, sir.
But I don't know. I still keep wanting to point back to the Genius Act because that was the first one. Theoretically, the first one should have the most pushback. But again, I believe it was either 17 or 19 Democratic senators that signed on to that one. So there is also track record the other direction. This one just happens to be more recent. And I still do happen to believe that there are more pressing matters that the Democrats are focused on. And this one may fall victim to political football, if you will. But regardless, even if it passes in the current state, am I thrilled about it? No. Am I happy that it did get passed? Yes, because we got rules on the books, and that's the big takeaway right there.
Sure. Yeah, I think, like you said, usually the second one would be easier, but since it's on such a nerve as this, as the sanctity of the dollar, I think that this will be an exception in that regard for sure. Probably going to be harder to get this one through, but depends on the deal they cook up in the back room, like you said. Tracker, whether it's swapping pieces of each other, or whatever the plan is. The strength of that plan, I think, will definitely tell the tale in terms of the ability to get it pushed through.
Yeah, Tracker, your observation that there could be a back room deal cut, with the banks, I think it's very astute because we've been talking about the banks wanting to get into tokenization and crypto for a while. So when we did get this pushback, it seemed a little odd until you took the stablecoin yield into the overall picture here. So these people have been prepping for some sort of intro into crypto, the banks I'm meaning. And if that's the case, then a deal like this could be possible, which is that they want some sort of piece of the game. They've been preparing for it. They're could be ready to take it at this point, and this could be the leverage in order to get that.
No, that would never happen.
No, no backroom deals ever happen.
I always look at that funny meme where it's like the kids on the steps talking to the animation. It's the animation meme. Kids on the steps of the Senate, and he's like, "Hey, Mr. Bill, how do bills become law?" And he's like, he hands him a wad of cash.
Yep.
Bottom line is, everybody wants a piece of the pie. Everybody wants to get involved, and the banks don't want to lose their leverage. So they're going to have to be reassured that they're not going to lose their leverage in one way or another. So hopefully that doesn't affect us too bad, and that it actually allows for another industry to thrive. If that means the rest are a part of those industries, then so be it. But I just want to see things come to fruition. I'm tired of I mean, the thing that's sick about all this is that, the whole point of crypto being created was to exactly go against the banks. And here they are now trying to fight it. And here we are once again dealing with this negotiations with the United States. But I get it. You have to have the clarity, and everything has to be in place in order to tap into the TradFi world to be taken seriously. Understood. I would personally like to see other countries step up and start to get much more aggressive with it from another side. Show that competition to where the United States has to step up and we better really start picking up on this. I know there's been areas like Dubai, areas like that have been stepping up, and other countries, but no real big financial threats at this time. And as far as Europe, they seem to be much further behind the United States.
Yeah, a few people have been loosening up on their tax rates, right, for crypto here recently, but nobody's really put out any sort of structure, and much like, we've talked about the US dollar hegemony over the world. I think that's probably a big reason why. I think nobody has guardrails out anywhere for it, right? People have different tax rates for it, but I think as US legislation goes, monetarily speaking, so goes a lot of the world because so much of the world has historically held the dollars. So it would be nice to see. You're right, and I can't help but wonder if the world's watching and waiting to see how the U.S. treats it, and they'll make their policies accordingly after. Who knows?
It could be. But I thought it was interesting when we covered the WEF a few weeks ago about how honestly, tokenization was a big thing, and it almost seemed as if the BIS, the WEF, and such seem to be more in favor with the United States' favor with tokenization, moving more towards, more crypto friendly, while it seemed like the European financial side seemed to be more against it. And I don't know, that's my optics. That's how I've perceived a lot of this over, it seems like the Europe seems to be taking a back seat or almost going to get left behind because they're not keeping up with the times. Like they're old. It's more like an old financial viewpoint of how they're trying to take on this crypto world. United States is much more aggressive. Other countries that come to mind that are much more aggressive, obviously like Southeastern Asia countries seem to be much more pro crypto, and they're moving in that direction. The BRICS certainly are. And when I include WEF, I'm including Switzerland into that because obviously that's where the WEF is, and the BIS is located in Switzerland. So I don't honestly, I consider Switzerland its own entity. It's not part of Europe, really, is how I look at it.
That's
if it's weird to say, huh?
That's a fair assessment.
Yeah. Which, on a side note, I think it's interesting. Have you ever looked at the map to see where Basel, Switzerland is? It's interestingly located. It's smack in the corner where Germany, Switzerland, and France all connect. I mean, we're talking within a walking distance to all borders right there. Just thought it was interesting. That's all. I mean, it's just interesting because that's where the BIS is located, and they are they are the central banks of all world central banks. Now, the Fed will say that's not really tied as one of their charters, but maybe that's here nor there. But I found that a little interesting when I was just doing a little research during the WF time.
True.
And Davos, where they're meeting, is actually on the most eastern part of Switzerland. So it's like central all the way to the east, if anybody cares. So anyhow, I'm just bringing that up because I think that it's interesting. Like Europe seems to be kind of falling out of favor. Like they don't seem to be on the same page as the United States for many reasons, obviously. But the BRICS seem to be more in favor, and during the WEF forums, it seemed like they would seem to be more in favor for tokenization and moving more towards digital. So I don't know, that at least that's the dynamics I took away.
Sounds about right.
If you guys have looked at any of the Epstein files about European financial data, there's some really interesting stuff about Greece and Germany and France. Yeah, put that on your to-do list to look through the Epstein files or Google it. It's really interesting.
I gave a preliminary search in the Epstein files yesterday, and just for anything crypto related specifically, there wasn't anything that I thought was very conclusive. In fact, if anything, there's something that says that these Epstein files don't understand crypto because Epstein was claiming to have met the creators of Bitcoin himself. And then I saw it got posted over on Reddit and everyone was just making fun of it. It's like, yes, Epstein. Yes, I have met Johnny Bitcoin and Eric Ethereum myself personally. And everyone's like, look at this clown. No, nothing really conclusive there. And by the way, I'm taking a lot of that stuff in that dossier with a giant grain of salt because some of the stuff has actually been more recent than what you would expect those documents to be. So it's going to require some serious forensics, but at the same time, it's a little bit of staring back into the nightmare box, and it's necessary to do to get the full picture. But at the same time, I'm not happy I'm going to have to do it again.
Yeah, it's a lot for sure. I guess. Yeah, I didn't mean to open the whole box. I was just trying to look at yeah, just peek it. The observation of in the email was that basically Greece was sacrificed. That their monetary policy was sacrificed to keep the EU afloat because of Germany and France's monetary situations for a while. And so when Tracker was talking about the difference in posture between the U.S. and the EU, the difference in the balance sheets of the U.S. and the EU and their productivity and GDP comes to mind, right? Now, surely the nation's productivity would have an effect on how they view crypto, I would think.
That's true. I'll tell you what, though, I already mentioned the nightmare box, so let's go stare at that thing again. This time, it just happens to be the Bitcoin chart. All right, well, Bitcoin's currently sitting at $77,000, 846. And, well, yesterday we got all the way down to 74,600-ish.
It's better looking than Ethereum.
Yes, it is. But at the same time, like, we have seen Ethereum in worse places in recent memory. Ethereum got all the way down to 2,100 and about 2,150, which, by the way, Moonpolar Rational Optics has a question for you guys. Taking bets, which hit 6,500 first, gold or Ethereum?
Man, gosh, I watched Sami pull a fib level off of the gold on the short-term move, and it bottomed out of all the levels. I mean, it's been such a crazy move on the gold chart, and it kind of feels like people, big banks toggling their leverage positions to wipe out retailers. It's kind of what it feels like to me. I don't know if you guys touched on that before I got got on.
We hit gold a little bit, yeah. But
Hey.
as far as gold, the price does appear to be recovering from the local low. I mean, granted, we're like 48 hours past that event, so I don't think anything's set in stone yet by any stretch of the imagination. So could be a dead cat bounce, could be actual trend reversal. Only time is going to tell.
I think the gold. But I think now the psyche in gold has been destroyed. Meaning, yes, it could still come back up. It could still try to recover some of that and then do another dump. That's a violent move. That to me looks like people dumping. Same thing with silver. I don't. Typically, when you get these monster dumps, you'll have somewhat of a. You could have a little bit more of a kind of retracement back up some, but I think most of the psyche's been damaged heavily, and I think you're seeing people are going to get spooked because things aren't supposed to move like that in these types of metals. They're just not.
That's what I was going to say, man. In terms of just the raw number of dollars to put in to get to 6,500 on Ethereum versus gold, it's laughable the difference in terms of the money that needs to come in.
So if I had to take a bet, I'd say Ethereum, which is going to sound kind of crazy, but I would probably say Ethereum just because it hasn't pumped at all, and it's at the suppression levels, meaning, and the liquidity is much lower. It's like what Dace is talking about. So you could actually make Ethereum move quickly, especially if something like the Clarity Act were to get passed eventually this year. You could see it really start to take off and people scooping it up, buying it. And then with more tokenization, we'll still go back into that picture. I still think right now, but goes back to what we were saying for the last 3 weeks or 4 weeks. If you're in silver, you're in gold, go ahead and start DCing out some of that stuff. And if you were doing that, you would have been loading up on some dry powder, and that dry powder would be looking really good on days like today or over the weekend. It would look great. So risk management, always try to look at risk management, and don't get too greedy on positions going parabolic. Certainly positions that don't go parabolic, but once every 45, 50 years. So I don't know. I'm going to have to say Ethereum on this one, though.
True. Well, tell you what, speaking of Ethereum, I got a good buddy of Ethereum, none other than Tom Lee, here for your weekly bull take on the crypto market after we went down to 74.
Because time, I'm gonna say something that it sounds a little contrarian, but Tom DeMark is our advisor at Bitmine in terms of crypto. He's been since mid-November saying Bitcoin would go to 77 and Ethereum at 2,400. So he's been waiting for what he calls time and price to align. This weekend, he believes we reached that alignment. So all the pieces are in place for crypto to be bottoming right now because we're getting the level and enough time has passed. So I think as long as crypto fundamentals are good, which is the case, Ethereum active addresses is going parabolic right now, and activity. Part of it is, of course, Wall Street is building up digital assets and converging those businesses. If that's the case, then crypto prices should follow. So if I'm going to say,
there you go.
Keyword should. That's what we can say. Should. I'm not saying should. So that's another good point he brought up that most people don't talk about. Yes, the transactions on Ethereum have been going crazy high, exploding on there, and he's right. They are building on it. So let me get this straight. Everyone's building on this thing. We got the Fed rates coming, we got the Fed rates potentially coming with more rates. I still think you're going to have rate cuts coming out this year. You've already had rate cuts. Everything's telling you risk on assets are on. And then you got the PMI number stuff coming out. Now, maybe that's the flush we needed. Maybe we needed to flush things out to start going back. I don't know. But man, it's like, what else needs to go? Like, everything's already been checked off. Freaking do something already.
I hear you. Look, we've been on the Tom Lead camp for a while here, which is that the fundamentals are lining up. We're now getting some confirmations from PMI. We've also gotten interest rate cuts. At this point, we should start to see those effects happen more and more. Russell's going up, gold is going up, S&P 500 is going up, all this kind of stuff. But at the same time, for me, there is one undeniable thing going on, which is that dropping down to 7,400 levels is a dangerous position. And the reason that I say that is that there's not much support below that, in my personal opinion. I think that this is what you would see if the bear case for 4-year cycle still holds true. This is one of the things that would show that. I don't think it's fully confirmed yet, But at the same time, this has shifted my opinion towards, I think there is a slightly higher probability that we are in the bear market and going to be experiencing it for the rest of the year than I am with that we're going up and to the right. The reason that I say that is that we have dropped a long way. We really have.
We will see, man. I think, you know, U.S. having to refinance their debt is a big deal. The new Fed is a big deal. So, like, we do have some other markers further down the road if we don't get Clarity Act, you know, passed super soon. But you also could be right. I know a lot of the 4-year cyclers and a lot of the vets are saying exactly what you're saying.
Hear me out. Do I still think that all the things we've been talking about as a tailwind for crypto are true? Yes. The difference is I think the timeline's gotten a little too extended. We went into 2025 expecting 4 rate cuts, and we're expecting them soon. We didn't get any of them till the very end of the year. Additionally, we've been waiting for a lot of the other indicators, Russell, PMI, stuff like that, to pop up into their aggressive areas. We're just starting to get that now. Theoretically, this could be still lining up pretty well with the 4-year cycle if it continues. I know it's crazy to say because we just started February and we said that a 4-year cycle continues low to low. It's the most consistent, meaning the next 4-year cycle low, theoretically, according to 4-year cycle, would be in December or January 2025, 2026, 2027. We're still a long ways from that. At the same time, though, the reason I've kind of shifted my views a little bit is that we're in a very precarious spot. I think that if we close below this like 74,000 level, I think odds are we're going to go down. To, I guess, further support this claim.
No, there's a ton of support though. That's what I was about to say. You got a ton of support at the top of a huge consolidation band. You got a point of control between 73.5 and 71.6. You have a big pocket there at the top of an area that was building support from March of 2024. We didn't break out of it until November of 2024. So most of 2024, that's the top. And we hit that top 1, 2, 3, 4, 5, 6. We finally broke through on the 7th try. So there's a lot of support there at that low in that point of control. So I would say if we drop down to that, you're going to find support down in this area.
That's fair. We have had a lot of price history in that area. However, there is one new factor that has come up, and that's this. Bitcoin has lost the 21-month EMA. This is something that I found recently. It actually was from an article over on Cointelegraph here. But the point is this, which is that this is one of the other indicators for when really the bad part of the bear market's going to come in. So 2021, we saw that we broke and closed below that 21-month EMA, broke down pretty heavily. 2018, very similar story. Also, this one kind of has another kind of confirmation, which is that the double top didn't break below the 21-month EMA and then found that other double top. So this appears to be going in both directions. Granted, at the same time, there are arguably 4 data points here. That is a small sample size. But at the same time, so is a lot of the other stuff we have for crypto just because of the length of the market. It's stuff like this, and it's stuff like this that kind of reaffirms, in my opinion, that kind of theory. At the same time, though, I'm not like out here saying it's 100% bear market confirmed. I'm saying odds are 40-60, 60% bear market, 40%. The reason I went from 50-50 to 40-60 is that I think we're kind of on the knife's edge a little bit here. And for me, it's that 74.
I'll say a little differently. I mean, we've already had a massive drop from 126 all the way down to 75. That's already a hell of a drop. And go back to that chart you were showing us. Yes, we had good pullbacks when we broke through that. But what did we also have? Big monster moves on the way up. We didn't get any big monster move on the way up. So who's to say if we didn't get a big monster move, you're going to have a much more smaller retracement than these other previous years? Because to me, I'm looking at a more maturing market because of how many market makers are in here now. So I think I would look at it like this. Keep in mind, this is the first time that now we're doing with TradFi being involved, right? So TradFi now is in it. We have spot ETF in place now. So this is not the same market those other 3 data points were. I know everyone's going to be thinking like that. Like I said, we talked about max pain. So you got max pain for the bulls. Well, if anybody's on the sideline waiting for those those 50 levels, the 50 level or the 65 level or any of those levels, the max pain would be it doesn't get down there and then it just kind of chops sideways or manipulates, then goes up. I mean, it does something finagling where it doesn't allow it to hit those positional points. It doesn't allow it to pull back that far. And people aren't going to get their entry points and they're going to get left holding and they're going to have to FOMO back in because it's going to start to take away from. I think that's another max pain scenario that we could look at. We kept talking about max pain. We got it for the bulls. Now are we going to get it for the bears?
That's all fair points. At the same time, I'm just trying to make sure I take in both sides of the equation here. And I mean, my gut's telling me.
Oh yeah, you should.
We went down 41%. What's a little bit more than that?
Well, we only went high. So what did we actually go up when we broke out from all-time highs? We only went from 74. We went up to 126. Right?
Yeah.
So we retrace back to the breakout. That's a health that is a market that's backfilling. Not that I'm talking about the top of the 76 level, 72 level-ish, right around there, this breakout area here, these pockets here. I'm saying we backfill. If you have a complete backfill, that's a normal concern market. I don't think we're going to get a breakdown that's going to go down into the 50s. Too many people would want that. Like everybody on the side wants this, and I don't think you're going to get it.
I don't know. I think that sentiment is starting to split a little bit more based on what I'm seeing out there. I think that the TradFi folks, they're fine if price goes down because they want price to go up sometime in the future, not immediately. Versus retail traders are really hoping that we have pretty close to immediate recovery and then start getting back up above that 100K level. And then the other side, the people that the 4-year cyclers, they're already out. They're like, yeah, keep going down. I got dry powder to get back in. So I think that we're seeing a little bit more variety in the opinions here. And it's not quite as much people just want crypto to go up. It's also people maybe even having like a realist view, which is like crypto go up, crypto go down. Might be time for crypto to go down.
I think more of a grinding sideways is going to be more brutal for people to endure.
The magic fruit option.
Oh yeah, I mean, like it just kind of grinds sideways down at these suppressed levels, and people get tired of it. Like it's not getting the level you want. Nobody's really getting what they want, so it just chops and kind of jumps around. It turns into more of a trader's market within a range. I could see something like that, and with the leverage markets, I could see that happening. Certainly with the ETFs.
That's fair.
I just don't think anybody's going to get what they want.
That is also a potential answer. I guess I'm looking at it like this. So I don't think we're getting any more rate cuts for a couple months. Yep. I think that we kind of have, in the US, we have a bit of a political stalemate when it comes to bigger, larger issues, namely immigrations and customs enforcement. Mm-hmm. I think that the Clarity Act battle could potentially drag out for a while. And that was one of the big things we were hoping on for a tailwind. All these factors are suggesting to me that we could be here a while. Whether we chop sideways, whether we go down, either one, the answer is not going up. And at this point, the two competing narratives really are 4-year cycle or something different, something extended or completely different based on other fundamentals like global liquidity, PMI, interest rates, asset prices, that kind of stuff. And I think that the 4-year cycle, it's that narrative is still holding up pretty well in my personal opinion. Like, granted, did we just giga dump? No. Do we always giga dump? Also, the answer is no. So it could be in alignment with that. But at the same time, I don't have confirmation of bear market. I'm just saying that the odds have increased, in my opinion.
I can make a case we're already in the bear market. It's already happened. That's what I'm saying. We've already fallen from 124 down to 74.
That's fair. And
quite a bit.
Another argument is that because we only got up to 126, as opposed to what some other people were predicting, which is like mid 150s as our or like 50% baseline, and then even like 180 or even 240 for the crazy predictions out there. Because we didn't get so high, we could see a muted bear market, meaning less downside. Whether that means 41%, it's possible. I think it's a little bit small of a drop off compared to our last one, which I want to say was like 78%, and the one before that was like 87%. So as far as the mathematical model of that logarithmic decay for both pumps and dumps in the future, I would be expecting the next one to be somewhere around like 70. But even if we got lower than that, maybe like 1 or 2 standard deviations would put it at like low 60s, high 50s, in my personal opinion. And that's just some napkin math, by the way.
No, that makes sense. I mean, I'm not gonna go against it. Certainly could.
Believe me, I'm hoping Tom Lee's right. I'm hoping that Ethereum beats gold to 6,500.
But that's the other factor people keep missing too. So everyone's building on Ethereum. Everyone's putting all these assets or tokenizing assets onto the Ethereum network. There's a fact where now you have to start doing the valuation based on how much assets are on your network. Yeah. They're going to have to start pricing that in and figuring that out. And TradFi is going to come in here and start figuring that out. They're going to start seeing this. I just think you've got more maturing market now. The market's more mature. Everybody kept talking 150. We're going to hit 150. We're going to hit 250, 200. We didn't see any of that. So now everyone's going to think we're going to see this to the downside, hit 40,000, 50,000. I don't think it's going to happen. I just don't. I don't. You're going to have TradFi come in. And keep in mind, we were talking about it. These big financial firms already said they're going to start opening up crypto trading for all their clients. They're going to start opening it up. They're going to start being told to push the clients on this.
Yeah, and that idea is even going further. Had another one here, didn't quite get to. Brian Armstrong thinks now is the right time to open the 1.5 trillion 401k market to crypto. Says agreed, let's do it. It's like, look, there is even more untapped potential out there inside of the TradFi space. 401ks are the way to do it. And yeah, like it's going to take some definite alterations to get to that point, which again, if we're talking government work,
Clarity Act,
have low hopes for that. I don't think 401ks are inside of Clarity Act. This would actually have to be a revision of tax code.
No, but I'm saying like that you're going to need that first to be able to probably even allow you to even go that far.
Yes, for sure. Definitely. Again, it's because Clarity Act is giving market structure. It's giving clear definitions, clear responsibilities, clear roles. That's the kind of stuff that you would have to have before you can even start having the conversation about the 401ks. Yeah. Anyways, yeah, good talks. Which, by the way, if you've been keeping up with the Telegram, none of this is new to you guys. Shout out to all you guys that have been really keeping up with everything going on in there. Y'all are studs, and we appreciate you guys a lot. And by the way, if you would like to get involved in the Telegram, you guys can head on over to walktheblockndf.com. Over there, you can find our membership page, and that will get you the sign up into our private Telegram, where inside of there you can find everything going on, whether it's the plethora of charts that have been thrown around this week or all the articles and tweets showing what's been going on at any given moment. That's where you can find all that stuff inside of there. So we like to say that the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together, private mentorship, exclusive live streams, Q&A. Go from beginner to intermediate to expert with us, because when we all work together, we can all win together. Alrighty, good sir. That's pretty much the end of the show notes for this one. Any final thoughts before we get out of here tonight?
I guess the takeaway would be, if you are looking to add any positions, I would be holding tight, wait for things to digest. There's no rush to get into anything right now. Yeah. Build your bags. Basically what I'm doing is building bags and then holding my positions long. I've got other positions coming in. I'm not looking to deploy anything. I just want to be able to have that. So if the lower prices are going to come in, I'm going to certainly be able to grab those. But like I've always said, don't turn your long positions into short trades. Long positions for me, when I'm thinking long positions, I'm thinking a decade. I'm thinking 5 years. I'm thinking like
That's
that.
Fair. Oh yeah,
those are long positions. Midterm, I would say, could be anywhere between a year, 6 months, and then trading is more high frequency. We're talking, a few days to maybe a few weeks. So don't get them confused. Don't turn one into another just because you got it wrong. That's a really bad mistake. These are the things we kind of talk about all the time in channels when we talk about a lot of people having discussions. Just be disciplined, do risk management. Like we said, we saw gold and silver going up. That might have been a great time to take something off the table. If you did that, great kudos to you. You're just doing proper risk management. That's all it is. And if you still have some positions on, that's okay. You're still up. If you've been building those positions over a long period of time, you're still up big. You hold those positions, but the DCAs you've done out, decide what you need to do. I wouldn't be too reactionary right now. You don't need to jump in. Wait for something to kind of calm down to say what you're going to do. If that's in the gold or silver markets, or if that's in the crypto markets, to sit back and wait for your opportunities to present themselves. Like typically you want things, give us some time to digest is what I'm going to say. Not really financial advice, but if I was me, that's what I'd be doing.
Agreed. Nothing that we give here is financial advice. But we do talk about helping people build strategies for themselves. And by the way, the long strategy that you're talking about, that like 5-10 year window, hear me out. If that's the strategy you're going for, then it means that these are actually some decent looking prices based on past price comparison. Additionally, even if that is your outlook and price continues to go down, well, your outlook is much higher in the longer term, and you can just keep buying it on the way down as well. Maybe not exhaust the whole stack there, but it could be a good buying opportunity. You could be in the camp of Tom Lee over there. I think he might be thinking a little more short term, but same time, that works. For the short term folks out there, though.
Yeah, I mean, I was putting positions. I would. Yeah, but I'm saying I was still putting positions on. I still have positions on that I put on in Q4 of 2022.
Oh yeah.
I put positions on long term back then, but I also took some off on the way up. But I also was DCNAing at various prices. I was unwinding things at certain prices. Just as things go, make big moves, you need to do it. I think people in crypto get so hung up that they're looking. Everyone's like got this like gambling mentality in crypto, and what's crazy is it's a counterintuitive of how people act in TradFi, because most people, outside of the put and call options and things like that, that's straight up, that's reckless gambling. But unless you have insider information, but
in which case,
now,
don't tell anybody. That'd be advantage behind the public. And
right,
we don't get financial advice, but
yeah, I do not.
Advice,
and
don't do that.
Yeah, I don't do it. So, but what I'm getting at is in TradFi, if you're making 20, 30, 40% moves, you would absolutely be taking stuff off the table. So why do you treat crypto any differently? I guess this is the thing that always drives me bonkers. People are up like, yeah, I'm up 3 to 5x. And I'm like, and you haven't taken anything off? Like, what is wrong with you? Like, take a third off, take something off, take a W. And if it keeps going up, it's okay. You're still crushing it. But if it pulls back, you're going to be able to stomach it a lot better if you stomach it. Just don't get so greedy. I think crypto, everybody gets kind of greedy and looking for these home run hits. When in reality, if you can get a 30% here, a 60% here, 70% win here during, just doing risk management, those will compound over time. And I don't think people quite understand it, because crypto does move. There is this theory, 1 year in crypto is 10 years in TradFi. So, and that's true, and it is, but just take some W's, man. God, take some W's, guys. You're gonna feel good when you take some W's off, man. So that's my all I got, man. But yeah, risk management.
Love it. And by the way, folks, we love chatting with you guys and love seeing our friends hop in here. Brown from the West, he said Bitcoin will finally go back down to 11K as foretold by the Fat Pulse Chain founder. I don't know if we're there with you on that one, but there'd be a great irony if that prediction came true. Would a lot of things be wrecked? Yes. At the same time, though, that is a generational purchasing opportunity, in my personal opinion. But yeah, that is pretty much all we got for the show here tonight. I see you sneaking in here, Jemmy. Didn't think I didn't see you. But we appreciate all you guys showing up. Thank you as well for a bit of a late stream tonight. Had a lot of stuff going on IRL with the team, which is all good stuff. Big wins going around over here. And hopefully we're going to get some big wins going on with the crypto market so we can share it with all of you guys. But outside of that, you can catch us over on the Telegram, or you can catch us on social media. But more importantly, you can keep catching us here Monday night, 8 p.m. Eastern time, most of the time. But that's pretty much when we try to stream. Outside of that, we got a lot of stuff to look forward to. No more Federal Reserve meetings until pretty much March at this point, I want to say. So you won't be hearing much about that, but you will be hearing a lot about the crypto markets, any of the government stuff going through, whether it's the Clarity Act or the other bill coming from the Agricultural Committee. And additionally, we're going to be keeping an eye on what's going on with people building on it, and if Tom Lee is actually correct that maybe it is the time for Ethereum. Outside of that, I want to thank you again so much for tuning in. We appreciate you guys a lot, and we'll catch you guys next time. Until then, ladies and gentlemen, good night.